This is Roy, Discounted Vacant Land, a land investor. So you're considering selling your land. So you are familiar with selling your land for cash with a realtor or by yourself. And usually selling with cash, the buyer cannot come up with cash or maybe with bank financing. But have you heard about seller financing? Okay, and the seller financing is a very, very powerful tool for you as a landowner because actually it's going to allow you to have lots of benefits. Okay, tax benefits and financial benefits, and I think you should consider that. But I just want to understand first, how does it work? Okay, and I want to show you what's the good thing about it and what's the bad thing about it. Okay, so what is seller financing? So how does it work? So let's assume your property for 100,000. And okay, I don't have all the 100,000 in cash, and also the bank doesn't lend me some money to purchase your property, because usually banks don't like to lend against land. That's the rules, okay? Because it doesn't provide any income. So what can you do? Instead of dropping your price until people are gonna have enough cash to buy your property, what can you do? You can become the bank. Can I give you an example, okay? And with seller financing, you can structure so many options. So again, you're going to have flexibility selling price. You're going to have flexibility on the down payment you're going to get from the buyer. You're going to have flexibility on the interest rate you're going to charge, okay? You're going to have flexibility on the terms of the loan. So you're going to have, so it's not that straightforward like buying with cash, okay? So you're going to have a lot of flexibility. So let me give you another example why it's very for you to consider something like that, okay? So imagine someone buying a house, and when you're buying a house, it's going to be on your name. And then you're going to Bank of America to take a mortgage, right? So if there are some issues with the home, if some maintenance issues, who is responsible? The homeowner, right? Not the bank. Again, if it's a rental property and you are collecting rent, but for some reason the tenant doesn't pay his rent, you still need, as a landlord, the bank. Okay, so I want you to think as becoming a bank from now. So you are selling your property to me, so I'm going to be the owner of the property, okay? So we're going to transfer the ownership using two documents, a mortgage or a deed of trust and a promissory note. And you're going to have a lien against the property. The same thing, I'm going to be the new owner of the property. Every recorded, we're going to use an attorney on the title to do all the paperwork, and you're going to have a lien which is recorded against my property. The same thing, like. So now to you, like the pros and cons to do it. Also, I'm going to try to give more example, and hopefully by the end of the video you're going to understand if this is the right thing for you or not. So why do you want to do the seller financing? The first thing is being a landowner and have all the responsibilities of paying the taxes and everything, or if you have any HOA, you are moving all these liabilities to the buyer, okay? So now the buyer is going to pay, and now you have a different, you are becoming something different. Now you're the bank, okay? So you're the bank, you have a lien, and you have a loan that is secured by your property that you just sold, okay? And you have money along the way, okay? So the terms of the loan could be 5, 10, 15, 20, 30 years. Depends, again, how expensive your property and what did you agree with your buyer. So the main thing, you are becoming like a bank. You're going to use the same paperwork like the bank use, okay? And you're going to provide a loan if something going to happen. If the buyer going to default, you're just going to take the property back. But you still keep all the proceeds that you got until today. Next thing why you should consider seller financing. So let's assume you're going to sell your property, okay? You're going to get some funds, okay? And what you're going to do with these funds, okay? Many people, what they're going to do, they're just going to put the money in the bank. Maybe you're going to put it in a CD. Maybe you're going to be able to collect in 1, 2, 3, 4% interest on your property. And again, if the Fed going to increase or decrease the interest rate, it's going to have a direct effect on what you're going to do. So, But in this case, you're actually going to lock in your interest rate on your loan for a long period of time. So again, everything is negotiable. You can charge 5, 6, 7, or 8%, okay? It depends on you if the buyer agreed to your terms. Again, in a high interest environment, you maybe charge a bit higher. In a low interest environment, you can charge a bit lower. It really depends. But again, it's a good alternative because if you're not sure what to do with your money. Also, these funds, because it's a secured loan, you are in a very secure position. So again, let's assume that you sold your property, it's worth 100,000, and you gave a loan for 80,000. So, or maybe a 90,000. Again, so first, the property value gonna go up in value with inflation, right? 3, 4, 5%. Okay, so your collateral gonna go up in value. Your position gonna be secured because over time, the property value when you're gonna collect interest and principal, your loan amount gonna go down. So you're gonna have more buffer in it where the buyer gonna default. So you're gonna, in worst case, you're gonna able to take the property back. That's what's gonna give you. It's a powerful thing because again, if you're gonna put your money in the stock market, property market can go. If you're gonna put your money in the stock market, the stock or any index, okay, it can go up and it's gonna go down. So you have no certainty about your income. Here, secured and you're fixing your yield. Another massive benefit, and again, you should consult here with your accountant. There's something called Code 453 installment sale. So let's assume you bought this property for 30,000 and you're selling for 100. So you got like a $70,000 capital gain. So most cases, again, depends how much you earn, your combined household, but you're probably gonna pay like 15% capital gain tax. But if you're gonna spread it to installment sales, so let's assume you're gonna do the seller financing for 10 years, you're gonna make 7 years. And only this bit gonna add it to your income, and you're probably your threshold be increased by much. That's a big difference. Sometimes, in some cases, you're even gonna pay zero. But again, you should consult with an accountant. So the next thing why you should consider financing, like I said before, you're probably gonna get a higher price for your property. Because again, once you're gonna able to, for like financing for your buyers, you increase your buyer pools, right? Because like in a city, right? When prices are expensive, you have less buyers. But if you're gonna be able to be flexible, allow people to pay you over time, you're gonna able to charge more. So again, you're gonna able to charge more, and you're probably gonna able to sell it a lot faster. And the last thing, like I said before about low risk, again, your interest in the property, you're gonna have a lien, right? You're gonna have a mortgage, sleep very easily at night because you're like a bank, okay? You're gonna be operate exactly like a bank. You're gonna collect everything like and everything gonna be discussed about why you should. Let's talk now about why you shouldn't do owner financing. And that's first the big thing. You're not gonna get all the money today. Okay. Again, when you're selling for cash, it's straightforward, okay? So it's a quick transaction, clean transaction. You're getting all the money now. So financing, you're gonna get money, probably gonna charge interest, but you're gonna pay time. So it really depends on your situation. But again, there is something in the middle today. Maybe you do need maybe a portion of your money to do something in other aspect of your life. Maybe you need like 5, 10, 15K today to do something. You're happy to get income from your property for the next 10, 15 years. So again, some people they need all the 100,000 or whatever. If they're gonna sell it for cash, maybe it's gonna be 80. You should consider that. Next thing is fear of unknown. Again, probably about 5 of all the real estate transactions are cash, right? Or cash or bank financing. So it's not that common. Sometimes even title or attorneys, they're really not familiar how does it work. Again, it's not rocket science. It's the same paperwork, okay? Like when you are buying a house with a bank. But not all the title companies or attorney are comfortable with that. And if they are not comfortable, sometimes okay? But just for you to be rest assured. So again, when we are doing stuff, okay, everything gonna be with legal people that understand that, okay? They've done many times in the past, okay? Your interest in the property, which is the lien, gonna be recorded. So there is no much risk to you, okay? Because if the only risk you're gonna get, right, you're gonna have you're not gonna pay you, right? So it's gonna be default, and you're gonna trade the property back, so you can sell it again. You can sell it on the financing, but you're already gonna get the down payment and all the pay. The last thing is, again, if the default, okay, you may have some headaches. Basically, you need to hire a foreclosure attorney or something, and then they're gonna handle the process. Usually, it costs like $2,000 to $3,000, okay, to get the property back. Okay. And that's gonna be a hassle. But again, just need to pick up the phone call, okay, and and find the right person for you to do it. But that's all. You're going to get property back. But again, property back, your property probably worth a lot more than just paying for the attorney. That's one. You probably got a lot more than $3,000 for the right. You got a down payment. You got maybe you got 1 or 2 years of income to do that. So you're not gonna be out of pocket. You're just gonna go to square one, but with more money. So hope I just help you to understand why you shouldn't go with seller owner financing, especially in this environment when it's very houses or so. Once buyers become a bit more open, once sellers become a bit more open how to sell their products, how to sell their real estate, actually you as a landowner, you can make a lot of money. Again, if you're not sure, if you still have some question, you can reach out and ask for it. If you haven't, okay, you can click on the link below and offer for us. We can review a property, and we're probably going to offer you 2 options. Usually we offer cash, the people for want fast money, or for people are happy to wait a bit and get a lot more for the property over the long run. So we can discuss both options. Okay. Also, what I've done below this video, I share with you, okay, so many little videos, okay, because we got so many questions over the past years. So I'm just gonna answer you like question by question because maybe you have something specific you're not sure from this video. Okay, so we're gonna try to ask you specific questions just to understand if that's the right thing for you or not. See you soon. Bye bye.